Hello all you investors out there. This is the Conservative Trader. You can find me at theconservativetrader.blogspot.com. Today I would like to talk about some of the past recommendations I've made, and over the coming weeks I'll select a few. Today I'd like to just choose one of my earlier trades, which was Estee Lauder, symbol EL. You see it on the screen, and familiarize you, I've got the stock price over 1 year. This is the 50-day moving average line. We've got the daily volume bars down here, green meaning up volume, red meaning down volume. And this is unbalanced volume. It's basically an accumulation of buy volume and sell volume. And what I'd like to show you is this particular stock was recommended on my website around mid to late January. I think it was somewhere around the 21st of January of last year. And the reason this stock was recommended was because of the breakout that occurred, you see here, on Jan the 21st. Notice how the stock broke out on very high volume. Let's go back to 2 year. And if we go to Jan the 21st, on the 2 year chart, you can see that this stock had been consolidating sideways for quite a while, something like 3 months. And then, for whatever the reason, we had a high volume breakout, giving us tremendous up volume, which shows us there is an interest in this particular stock. Subsequent days, there was clearly a consolidation. We call this a flag formation, and this is a very bullish sign. So to my readers on the website, I recommended at this point that this stock might be worth watching. Of course, it's not necessarily a buy, but it should go on your watch list. We need to be aware of the next action after the breakout. And we went through a quiet period here of consolidation, and the next action was another move up on increased volume. You see it there. So this is the signal to buy the stock. So if we'd have bought this stock around $53.60, and we would have seen the stock start moving up. The plan now is to limit our potential losses. So we would buy the stock at say 53, and we might put a stop somewhere down here around $51, giving us a potential maximum loss of about 5%. As the stock starts moving up, we should move our stop up at least to our purchase price. So now we're in the stock for free, and because we're in the stock for free, we can be looking for other purchases. Now regarding this purchase with Estee Lauder, you see the stock starts moving up, breaks out of the consolidation, some more consolidation here, and you see it break out again on volume. See the volume pick up here as the price starts going up again. Some more consolidation and further breakouts as it goes up. Here there was a little bit of volatility, and the stock in fact was moving sideways for about a month. This area here. This is where we watch things very closely, and we move our stop up to this line, which would be about $61, which is at the base of this consolidation area. So the stock's now gone from 53 with a stop at 61 if things go against us, which is now starting to be something like 10 to 20% profit, depending on where you get out. But we see the stock break out into the upside again and start moving up. Here we have the alarm bells. A big break in the stock price. Normally at this point we would expect to see a higher volume as the stock breaks to the downside, and sure enough, you can see that we've got a high volume spike here as the stock moves down. This is the signal to get out of this particular holding. Now, you could maybe sell half if you feel that you need to give it a chance. Let's assume you sell half of your holding. You now watch the stock further. You've now made a nice profit on the half that you've sold. And what do we see happening here? This is in late April. We see the volume picking up. Here's the volume to the downside, and the stock is falling. At this point, you should certainly be selling the second half of your holding. And in fact, if you did decide to split your sale into two parts, around this area where you see the cursor is where your second stop should be to get out. And as you can see, the stock really went nowhere for the next 3 to 6 months before it then did resume its upward climb again. We're not interested in Estée Lauder after it broke the uptrend and we sold the stock out. We were interested in Estée Lauder when the stock was consolidating sideways, as shown on the 2-year chart. Let's go to January there. And we're watching the stock move sideways and we're waiting for the breakout. When we look for the breakout, this is really from a technical point of view. It's called technical analysis. We also have to consider the fundamental analysis of the stock. This particular company, for us to consider it a stock worth buying, you really need to see increasing earnings and increasing revenue. And you would certainly like to see increasing earnings and revenue of 30, 40, 50%, the more the better in fact. This meets our criteria, so this would have been the buy here, and this would have been the sell here. Happy trading folks, talk to you again.